Alright, what's going on everyone? On this video I'm gonna go ahead and place a live trade and I'm gonna show you guys my whole thought process, how I thought of this trade, why I am getting in, my risk exposure and possible outcomes for this trade. So the trade that I'm gonna go over today is an Air Canada covered calls trade, and the reason behind it is I want my shares to work for me and give me some cash flow. And since commissions are high on quest rate, I think it's best, in my opinion, to number the lesson of executions. So instead of placing this trade once a week and playing weekly options, which would cost a lot of money since every time that you would sell them, you would be paying 11 bucks with quest rate, it'd be best to pick a option that is expiring further ahead so that you can collect the income equivalent as if you had sold weekly options. So once a month where you collect more premium, it's better than doing it multiple times a week, multiple times a month, where you would collect the same income, but commissions would decrease your possible or potential profits. The possible candidate that I'm looking at is the July 16th. There should be a 16th right here, 2221 30 covered call, and this option is 5 points at the money, and it still has 144 days till expiration, and I believe it's at 200 bucks right now. And the last thing to observe is that I would walk away with profit regardless of how this trade plays out, and I will break down that in a second in the charts. So I'm deciding to pick the 30 strike price since if we look at this chart right here, we can see that in the past, Air Canada has had a tough time breaking this 28 level. So even if we look at it from a price action point of view, we see that it got rejected here, 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 and more recently here as well. So my way of thinking is I wanted to pick a strike that it'd be tough for Air Canada to go over in a short period of time. Yes, I do believe that Air Canada long term is going to be worth above 30 bucks, but in my opinion, I don't think that's going to happen by July. I could be completely wrong, and I would be willing to either A, get my shares assigned at 30, or close the trade early, which I will break that down in a second. The day that the option would expire would be July 16th, so right here. Alright, so now I'm going to go ahead and break down the possible scenarios that this trade could play out. First of all, let's start by noting that I bought Air Canada at this price right here, so $18.97. The first case scenario would be that Air Canada stays flat and it trades at around the same price that it does today. So I would still be in the green in terms of my shares, and also I would have gotten to collect the premium from my from selling the call option. I am holding this stock for the long term, so yes, it didn't appreciate in the short term, but I did get to collect some income. The second scenario would be that Air Canada dumps and stays over here. I am holding this for the long term, so I do not mind that it drops back to my break-even price. If it does break below the price that I bought it, it would be a different story. But if it does drop below today's price to levels at around 20, 21, 22, that'd be okay since I collected 200 bucks for my premium. And lastly, if this stock was to go up and cross my strike come expiration, I have two options. First of all, I let my shares get assigned at 30, and I in total realize a profit of 1500 bucks. Given that I bought here, I'd be selling here, so in that case I'd be missing in some potential gains if it does go, let's say, to 35 or even 40s, 44s. But what I could also do is to close the trade. So I sold my option for 200 bucks, and depending on what the option was selling for in the future, I could still sell it for a profit if it was trading at around 100 bucks or 150, or I could close this trade early and sell it for a loss. If my option contract come expiration was at, let's say, 300 bucks, I'd be okay taking the loss in terms of the option, since I'd be losing 100 bucks, but in terms of my actual shares, I'd be way in the money because I did buy them at 19 bucks. So that's why I like this trade quite a lot. Alright, so now we're here in my brokerage account and we see that Air Canada is trading at around 25 bucks. And I'm gonna go ahead and select the July 16th call options. I did go over all of the strikes, and the one that I liked the most was July 16th right here. First of all, we can see that I could collect about $2. And the nice thing about this one is that if you look at this open interest column over here and volume, it does have a higher open interest and volume, which is higher than nearby strikes. I'm gonna go ahead and place buy and sell, and we can see that this option has actually, in the long term, decreased in value. So look at that. We started at $5 and we're right now at 2. So even though yes, Air Canada has been trading up, the overall option has lost value, and an investor could sell it at buy it back at a lower price. So that's hopefully what I hope to do with this option price. So a call at 30, and I'm gonna go ahead and try as close to the ask as possible. So let's start with $2.05 and sell. Yes, yes, it's been accepted, but it's too high. What I'm gonna go ahead and try is to just sell at the bid and see if I can get into this trade. We can see here that I currently have 82 bucks in cash in my account, and as soon as I sell this right here, you can see I got filled at 195 and my cash has updated. And if you look at my positions right here and group by underlying, I am short a July 16th 2021 30th call at a price of 195. So I did collect $1.95, which minus commissions I netted for $184. With that being said, that's the end of this video, and I hope you guys found some value, and I will see you guys in the next video.